Hi guys, and welcome to our weekly focused video where we're going to be talking about the upcoming week in relation to price direction. So I'm not going to look at a lot of assets today. I'm only going to focus on dollar and Euro USD. For the main reason that if you're in the mentorship, you already know that you need to put in the work. You need to do your own analysis based on the guidelines that I would have given you guys on the group. So without taking much of your time, so first things first, we need to take a look at the calendar and see what's coming in terms of fundamentals in the next week. So it's also the last trading week of the month and the beginning of a new month. So tomorrow we've got retail sales for AUD, but it's a Monday. We don't really entertain like trading on a Monday because we need to see the intentions of the market. We need to see how the market is going to react to events that have happened during the weekend, especially what's happening in Middle East. Yeah, things are a bit escalating on that front. So Monday for me is going to be a guideline, just to say, a guideline on how I'm going to approach the rest of the week. Also, it being a month end, so we got a couple of month end inflows that are coming into the markets and a lot of profit taking from the institutional traders. So Monday, yeah, you might need to be very careful if you're going to be trading tomorrow. We're also going to get, I'm quite sure we are going to get gaps in the market when the market opens. We're going to see a lot of currency pairs, a couple of commodities, oil and gold. They are going to open with gaps. So just take note of that. Then we've got Tuesday. We've got BOJ monetary policy. This could be a surprise. The interest rate decision for Bank of Japan. We could get a surprise hike. I'm really not sure, but we could get a surprise hike from the BOJ. And then heading into London Open, we also have French GDP. We've got core CPI for Euro. We've got GDP for Euro. That's Tuesday. We also have CB consumer confidence for the United States. That's a crucial one for Tuesday. That's a very important one. Then Wednesday carries on with the BNZ governor. You'll be speaking. And then we've got almost a pretty quiet London session on Wednesday. Remember, it's also a month end on Wednesday, the beginning of a new month. So that tells you a lot about upcoming week. It's also NFP week. So Wednesday, the 1st of November, there's quite a lot now in regards to dollar fundamentals. We also have FOMC, Fed rate interest rate decision. I'm pretty sure we're not getting any hikes there, and they will look to stick to their hawkish sentiments towards the dollar. So that's crucial now for our forecast on dollar index. Prior to FOMC, we've got manufacturing PMIs for the dollar around 4 p.m. That's New York Open. Then Powell is going to come later on 8:30. Then Thursday, the main ones on Thursday, we've got Bank of England on the calendar, and then the usual initial jobless claims, and also press conference by Bailey, the governor of Bank of England. Friday is a holiday in Japan. It's also a holiday in Sweden, but it's important for dollar. We've got NFP on Friday. That's a bit of a lower forecast. That should be interesting. Then we also have pound PMIs on Friday, but that's already end of the week. So yeah, it's a pretty good week in terms of volatility. We are going to see huge expansions in the market. We're going to see a lot of movement, which is what we need as traders. We need movement. Consolidating market is pretty much difficult to trade. So looking at dollar, right? My bias on dollar hasn't changed, right? We're still looking for expansions to the upside. We're still looking for market to target internal range liquidity of buy stops. We're still hunting for long trades. So looking from the monthly point of view on dollar index, price is still trading in our monthly fair value gap. You see this range here. Price is still trading in our monthly fair value gap. And on the weekly chart, if we go to the weekly chart on dollar index, price has mitigated the weekly bearish order block. This weekly bearish order block is providing huge resistance to price. It is in control of price right now on the weekly chart. But the reaction now from the weekly bullish fair value gap is quite telling. You see, this reaction here from this fair value gap here, you can see price push to the upside after creating the low of the week on Tuesday. When we go to the daily chart, so you can see, guys, this is basically me reading the price action on my higher time frame MWD. The daily bullish fair value gap could be used as an institutional support level. The daily bullish fair value gap, this level here, is quite important. So we could use that as an institutional support level. Now, when we talk of targets, like as in where should we anticipate dollar to trade to, right? Dollar right now, I think we could be aiming for these old highs here. This old high, that's a pretty much it's a pretty much easy target, unless something changes for FOMC, unless if something does change. So we're looking for price to trade to these old highs here on the daily chart. So we're talking of somewhere around 107.050. You see, that's your target for the week. But that is not just gonna happen. Don't anticipate it to just open and then goes to the upside. Your anticipation as an institutional trader, as someone using smart money concept, price should likely grab liquidity, internal range liquidity of sell stops before it can move to the upside, right? So for price to do that, where is it likely to find support? You see, that would be your next question. Where will price likely find support? So let's do this. So with an expansion from last week Tuesday to last week's highest price point, right? That's basically our expansion in the market after market had taken out sell side liquidity in the form of sell stops below Monday's low. You see, these relatively equal lows here. Price took out the lows and then it expanded. And if you go on a weekly chart, you can see we've got a fair value gap right there. This bearish candle here, the high and the low of this bullish candle, which is a breaker. We've got a fair value gap. That's where price found support, and then started moving to the upside. So with our fibs in place, we are hunting for long trades from anywhere below the equilibrium point up until the 79% retracement level. So this is where we should be hunting for long positions, right? And you can see the confluence that it has with that daily fair value gap. Yes, price has already found resistance and pushed to the upside. First time here, second time here, and third time last week, Tuesday. It does not mean the level is not going to provide support again when price comes back, you see? So that's now you being in a position to define now what PDRA metrics are inside that range. That fair value gap is still in control of price. And we can see here, price is inside our monthly fair value gap. You see, bullish fair value gap, this monthly bullish fair value gap. With that in mind, right? With that in mind, on daily, from the equilibrium level to 79% retracement level, on daily, we've got a bullish order block. See, range is a bit too high. You see, the range is a bit too high. So what do? You go to a lower time frame. If the range is quite high, you go to a lower time frame. Already, we've got this H4 bullish OB, right? So you'll be anticipating price to drop and grab the internal range liquidity of sell stops below this low and that low before it finds support for a push to the upside. Now, the moment price is trading inside this H4 bullish order block, guys, you need now to have a fundamental that is going to be a catalyst for price to move to the upside. You see, that's where most people are still getting it a bit confused there. It's not just a case of price dropping down into this bullish order block, then you are what? You're buying. No, that's not the case. Have a catalyst, have an event that is going to push price to the upside. It's not just a case of you buying and then anticipate a reaction. Yes, sometimes you can do that if there's no fundamental, but that's basically hanging yourself to the hawks. They'll come and swoop you off. So be in a position to have a clearly defined structure. So you can see already. So this is closing price for Monday, right? For Friday. Monday is going to have an opening candle. Depending on where Monday's price action trades to. If it goes higher, it goes to the upside. If it goes to the downside, you are in play. You're hunting for price to reach your discount array. Since you're looking for long entries, you wait for price to reach your discount arrays. Right? Once it reaches your discount array, you go to the calendar, right? So Monday, pretty much there's nothing in regards to Euro news, but we've got German CPI. That's definitely going to affect Euro, right? And inversely, the dollar. And then on Tuesday, we've got manufacturing PMI from China. Those are going to affect the dollar. We also have POJ. It's going to affect dollar. But later on during the day, London, mid-London session, we've got CPI for the Euro. And then we've got CP Consumer Index. This one is crucial one for Tuesday, depending on where price is, whether it's inside this H4 bullish order block or it has already dipped down to the downside all the way to say maybe 62% retracement level. You can see we've got a fair value gap right here. This candle's high and this candle's low. We've got a fair value gap. So knowing where price is in relation to your range, your dealing range, is crucial if you are going to link it to a fundamental. You have to know where price is. So that's dollar. We are looking for long entries on dollar index, meaning it's the opposite on Euro USD, right? On Euro USD now, price is trading at a key monthly level. We've taken out an old low on the monthly chart. We've taken out an old low, excuse me. The monthly fair value gap is the possible draw on liquidity. The monthly fair value gap, that's your possibility of the draw on liquidity. This level here, chances are very high that we're going to see price being drawn to the downside. Remember, we are bullish on dollar. So inversely, we're looking for shorts on Euro USD. If we're looking for shorts on Euro USD, where is price likely to go? Imbalance. You see, market inefficiency. You're looking for price to trade to levels that haven't been efficiently traded. In this case, on the monthly chart, yes, it's a higher target, but that's your initial monthly target, right? That's your initial monthly target. So price is still respecting the weekly bearish fair value gap. Price is still respecting the weekly bearish fair value gap. Price has also reacted off a daily fair value gap on Friday. Go to the daily chart. Price has reacted from the daily fair value gap. Just highlight it right there. You can see how price reacted. We had redistribution here in fair value for shorting opportunities. So your weekly target on Euro USD has to be this old low here, and ultimately the monthly the weekly range down here. That's your target in terms of Euro USD. In terms of entries, now you go to your H4 chart, you highlight the premium areas. So you can see there we've got this bearish order block on H4 from premium to low. Is now I'm defining my dealing range. I'm defining my dealing range using the expansion from last week. This is Tuesday's high. Remember, I said in a bearish weekly order flow, anticipate or expect the market to create the high of the week, either Tuesday or Wednesday during London session. And that's basically what happened here. On Tuesday, we created the high of the week, and price just flashed to the downside. On dollar index, we had the low of the week because it's a bullish market with a bullish institutional order flow. Expect the low of the week to come in on Tuesday or Wednesday during London or New York session. So it's crucial to take note of the lows that are formed on the asset that you are trading. Once you have a bias defined, it's crucial to take note of the Tuesday or Wednesday's low in relation to the rest of the week. So you can see here our premium area, our premium range is this level here. You see, and below that we've got a bearish order block. So expect market to redistribute in fair value either into this level or this level for a move to the downside. There's going to be a lot of movement next week, especially during FOMC. So we could see price ultimately targeting these levels here, 1.044 or 1.047, right? So those are your targets on Euro USD. So with that in mind, you now have a clear understanding of what you need to do in terms of the other assets being Aussie dollar, New Zealand dollar, USD CHF, USD JPY. Just be careful with USD JPY. And then also USD CAD, you should be hunting for longs on USD CAD, hunting for longs on USD CHF. Right. So for those of you who are not in the mentorship, guys, this focus is specifically for the mentorship guys. So you can hear sometimes I reference what we talk about in the group. If you're not in the mentorship group, you can just send me a message if you want to join the group. So that's basically what I'm looking for within those two assets in the coming week. That's Euro USD and dollar. The rest of the currency pairs, they're going to be determined by that. For instance, if you look at the pound USD. Those of you who have been following pound USD, remember the target is still the same, but from premium, and we're almost reaching the level $1, 1.20, right? That's our target on pound USD. If you go to an H4 chart, which is our entry for our short-term trades, you can see there we've got this bearish order block, high probability also, because it is accompanied by a fair value gap that gives you a target all the way to that low. You see, that's your intraday target from this level here. So expect pound USD to redistribute in fair value on the H4 time frame. Expect pound USD to redistribute in fair value for a move to the downside. Then we look at Aussie dollar. Aussie dollar, we're also looking for price to trade to the downside. It has now reached the target that I mentioned. Aussie dollar has reached the target, which is this loss here. They've been liquidated. So we're looking for a redistribution in fair value for a push to the downside. So that's Aussie dollar. We're looking for redistribution. Price might have already redistributed here. You see, we've got fair value right there. Take note, I'm using these candles high. Then we had an expansion. These candles high, and then we have an expansion to the downside. So now our target is this low right there. So you can define your dealing range. If you're going to use the H4 time frame for your scalps, if you're going to scalp, use the H4 time frame for your directional bias to define your dealing range. So anyway, inside this range here, you've got premium arrays, you've got your PDI matrix there. So you've got this high here. That was a redistribution in fair value, and then price push to the downside. So hunting for shorting opportunities on Aussie dollar. Same applies on New Zealand dollar. This old low here that was formed on the 26th. This old low here, that's your target. You can see already New Zealand dollar redistributed also in fair value, right? So yeah, that's pretty much about it in terms of the precious metal. Right, this thing is just gonna keep pushing. Yeah, we could be well above 2,050 per ounce on the precious metal. So yeah, that's pretty much about it, guys. And I hope you have picked one or two in terms of how you're going to approach the market in the coming week. Yeah, longs ideal on dollar, and then shorts ideal on Euro USD. So yeah, that's pretty much about it, guys. I wish you good luck and happy trading in the coming week. Thank you.